Okay. I got to ask you a tough question now, CJ. You hold not just Bitcoin, but other crypto assets. Do I have that right?
That's correct.
Okay. So you got to tell me what, and you got to tell me why.
Yeah. So first of all, let me say this. Let me define Bitcoin maxi, because I identify as a Bitcoin maxi. That means that Bitcoin is the reserve asset of the internet economy, the most pristine form of collateral in the world, commoditized energy in the form of money. Nothing can compete with Bitcoin. Nothing. There is no chance of any other network in the world. There's not enough money. There's not enough chips. There's not enough resources. There's not enough time and energy. Nothing can compete with Bitcoin. Bitcoin has already won the fight. If it was going to lose the fight, it would have lost it in the earlier years. The Pandora's box is opened. The fight has been won. Bitcoin is the reserve asset of the internet economy. It is the digital collateral, the base layer money of all future finance will be built around Bitcoin equity. All of it. It's not going to be built around Ethereum. It's not going to be built around any of the other tokens at all, most of which are shitcoins. There's only one reason for the existence of Ethereum or other platforms like Stacks, and that is to evolve Bitcoin from digital gold to digital collateral. So when I first participated in the Ethereum ICO, we'll call it, I figured, hey, I'm going to need some Ethereum because it's going to help me manage my money, right? Because Bitcoin is my money, and I'm going to want to use smart contracts to help unlock some of the equity that's trapped in my money, right? Remember, gold failed because it wasn't acting as collateral. Gold failed because you couldn't post $1 billion worth of gold. And then if you actually had to settle up and fly it across the world, it would cost you more to fly it across the world than it would to pay interest on your loan. So gold failed because it didn't act as collateral properly. Bitcoin will succeed because it's the perfect, most pristine form of collateral in the world with easy, fast, secure settlement. I mean, there's nothing can be compared to it, and nothing else can compete with it. So I just want to make that absolutely clear. And the vast, vast, vast majority of my portfolio is in Bitcoin. However, we will need a way, whether it's a centralized company. I love Swan. I think Swan Bitcoin is great. Bull Bitcoin is great as well in Canada. These guys are great, trustworthy, centralized companies. But there's also going to be trustworthy layer twos, whether it's an anchor chain like Stacks or whether it's something like Atomic Finance, where you're on chain making contracts with each other. So there is going to be tools. There are going to be financial tools and products that are built around Bitcoin equity that offer the same financial services that we see in the traditional system today. A lot of maxis are saying, well, it's Bitcoin only and you don't need anything else. Yes, when you're talking about the reserve asset of the internet economy, it is Bitcoin only and you don't need anything else. But are we really going into a future where all transactions are based on peer-to-peer exchanges? What if you just get rid of personal credit? Let's just say personal credit is moral hazard and we don't want to extend credit to people based on debt. If they want to take out commodity credit and borrow against their assets, that's fine, but no credit because it's a moral hazard. Okay, that's great. But there was credit when the gold backed the dollar too, but it was backed by equity, not debt. That's a difference. And what about a business? Shouldn't a business be able to borrow against its cash flows so that it can expand its supply, reduce its marginal cost of production, and then lower the front end price so that that demand can increase and they sell more units? There are a lot of financial tools, products, and instruments that exist in the world today that allow growth to happen at a faster pace. Now, don't take that as the Keynesian modern monetary theory lie that without credit, there can be no success. No, that's false. But there are specific financial tools and products that are going to be built around Bitcoin equity, and there will be a commodity credit market with Bitcoin as the most pristine form of collateral that allows us to facilitate these transactions going into the future. And they will be much more secure, much more safe. And by the way, they'll be under levered, right? Because when you go take credit, you're over levered. You're taking the promise of tomorrow's production. And what happens if you can't produce tomorrow? Well, there's nothing left. There's no value left to back it. But when you take Bitcoin and you borrow against it, and you borrow against, maybe Bitcoin's worth 100,000, and you decide I'm going to borrow $50,000 against my Bitcoin. Okay, well, if you walk away, if you take that $50,000 you borrowed and you walk away, the lender doesn't care. They don't care because they have principal plus interest being held as collateral. It's a much more safe and secure system, and it will facilitate different types of credit markets going into the future. It's a beneficial thing for the economy to be able to have commodity credit. And that means that's credit that's backed by real world equity, not credit that's backed by debt. So I just want to make that clear for people. Bitcoin is the reserve asset of the internet economy. However, there will be smart contract platforms, maybe some of them built on top of Bitcoin, and they don't have to be their own independent thing like Ethereum. But there will be tools and products that help evolve Bitcoin from digital gold to digital collateral. And if these people are acting like the Ethereans and trying to claim that they're hard money competing with Bitcoin, they're really just shooting themselves in the foot. You know, I said, if I was with them, I said, we should have did 1,000 to 1 split. For every 1 Ethereum you have, you get 1,000 more Ethereum. And then the price would have went from $4,000 down to $4. That would have let a lot more people enter the marketplace. But most importantly, the gas prices would have went down. So you're paying $100, you would now only be paying 10 cents for that transaction. And all these L1s, a lot of the shit coins, a lot of the scams, they really started because of the mismanagement of Ethereum, because of the misunderstanding that they had a chance to compete with Bitcoin instead of complement it. Bitcoin is the reason that everything else exists. So anything else that's built around Bitcoin to compete with it is a scam, and you should get as far away from it as you can. But if it's there to complement Bitcoin, due diligence is required to understand whether or not that's a sustainable ecosystem. And that's my thesis on the internet economy and the build out of future finance with a commodity credit market with Bitcoin as the base layer backbone of the entire system.